Hello there everybody, a very good morning to you all and welcome back to another live stream here at Taurex and at Atmos. I hope everyone is doing well and has enjoyed the carnage. The carnage that we've seen in the markets over the past 5 days. It's been nothing short of, I wouldn't say unprecedented, but I would say extraordinary, really, with some of the moves that we've seen. So today, I will be looking to break down everything that's happened, some of the things that we need to look out for. Of course, this stream is dedicated really to NFP, and you're going to hear my opinion on NFP, but to give you like an initial diagnosis, shall we say, is that I don't know how important it is anymore. How important is NFP? It is important if we get a certain figure, but if we get something which, and I'll talk through the figures and stuff and what I think will happen in certain, if we see certain figures. But as of right now, who's even talking about NFP? Leading into with what we've seen with the Trump tariff and the subsequent sink. The US dollar fell by, the US dollar had its biggest daily move in a decade. That's how extraordinary the moves we've seen. So when you think about this from a trading perspective, it works both ways, really, doesn't it? Because I'm sure there's people out there who've made a lot of money, and I'm sure there's many more people who've lost a lot of money. And this is where sometimes I find that sort of scalping strategies tend to be not so good. To be honest, this is what I found, because I can imagine getting wrapped up on those 5-minute, 1-minute time frames in this mess. I don't know how people will be able to do that, to be honest, but they've probably got more guts than I have anyway. Anyway, good to see everyone who's here. I know it's a Friday, and I don't normally stream on a Friday too much. People are off and gearing up for the weekend. They don't want to listen to me, but it's good to see we've got some people tuning in today. So we've got Bobby, hello to you, good to see you. Kurtzen, hello to you, good to see you. Thank you for tuning in. And then Fatai, hello. Thank you very much for tuning in today. And hello to everyone who's watching directly, maybe from the Discord channel. It's good to have you on. It's good to have you on board. Right. Okay. Where do we start? I said this yesterday, but where do we start? Let's start with this. $2.4 trillion wiped off of the US stock market in one day. The US stock market suffered their worst single-day collapse since the early days of the COVID-19 pandemic. If anyone was trading around that time, you may remember the big crash that we had when COVID became a global pandemic. The S&P 500 plunged 4.84%. Raising 2.4 trillion in value while global markets followed suit, triggering recession fears. So the reason that we're seeing this, everybody, just to be crystal clear, Trump tariffs, people are quite clearly concerned and pricing in now that this is going to fuel a global recession. That's the situation we're in right now. Not great, to be honest, for the bulls anyway. As traders like us, we can play both sides of this, and I've been calling the stock market for the last month or so, and I have admittedly said I'm not an active seller of the stock market. That still remains for me. This, for me, is just getting me excited for the run back higher. I think, as I said, and I'm going to keep saying this until it happens, and then I'm going to look back on one of these streams, and I'm going to say to everyone, look. When you get such an opportunity in the stock market, when something falls so heavily like this, when the stock market falls so heavily like this, the 80s, the dot-com bubble, the global recession, the 2018 crash, the pandemic crash, what's the one thing that was 100% in all of them? Was that it recovered and went higher. This time, I don't see it being any different. So for me, this isn't about having FOMO. I want to see this thing drop as much as possible. And I'm sorry if you do have active positions. I'm talking about from my perspective, from my own trading, from my own investing perspective. I want this to drop as much as I can, as much as it can. I want to see 30%. I want to see a recession, 30% drop, purely from a trading point of view. Obviously, we don't want to see recessions. They're not good for people's jobs, etc. But in terms of for trading and for markets, I want to see a 30% drop in the S&P 500, because then I'm going to buy it back up. And that's going to be the trade for me, not actually actively trying to get into short opportunities. So I want to make that very clear. I don't go selling the stock market, especially during crashes. Often when you see crashes as well, sometimes they're met with some massive spikes. I wouldn't surprise me if we see if this turns into a bigger crash. It wouldn't surprise me if the S&P 500 or the Nasdaq has a few days where it's 2 or 3% up on the day. Really wouldn't. The volatility is crazy, so just be careful. Anyway, the other thing that I wanted to talk about, because I know some people in here trade oil, and I trade oil as well. Oil is on track for its worst weekly loss in months as the Trump tariffs and OPEC supply decision. So what we had this week was we had the tariff situation causing fears of a recession, right? So that's the first thing. And with the fears of a recession, what we had is that lowers demand prospects for crude oil. Therefore, we see crude oil prices lower typically. And then we had OPEC come out and triple their production on top of that, which then caused something like a 6% fall yesterday in crude oil prices, which is just crazy, really. And if you look at crude oil, look at the trade we had marked. Look at that. What a beast. Daily supply zone. I mean, again, with trading, look, you got a little bit of luck, right? Because the momentum swung massively in our favour when OPEC come out and increased their production. But you can see, look at that, absolutely beautiful right from there. So for me, I mean, look, if you look now, crude oil prices, look at this support, which is then going to be coming to be tested again. I've actually marked this. I've marked this in the past. I said it last time when it tested here, but I'm going to say it again. If we break down below all of those support areas you see there, there's no reason why we don't see oil prices down at the mid-50s, even lower if there's a global recession. Just saying. Try not to be too. Everything's fear in the news, isn't it? Fear and panic, and it's hard not to sort of get wrapped up in it sometimes, but. That's why I said at the start of the stream, look, I'm not actively looking to sell this. It's just going to be crazy, but I am actively looking. I am actively waiting patiently for the run up higher. So it's not all bad news. Okay, right. So the thing that I wanted to talk through today, because obviously I was away at the start of the week, but we do have the small matter of the non-farm payrolls, which in any normal environment is one of the biggest and most important news events that we have in our monthly economic calendars, because it basically tells us, in really simple terms, the state of the US jobs market. The US jobs market, how strong, what's the unemployment rate, how many jobs are we creating in the previous month? You know, it's very important, probably the most important. Now you add into the fact that we're talking about recession, tariff, recession, blah, 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 all that sort of scary stuff. Now we add NFP on top of that. We're now at a situation where this could get really, really messy. And I'm talking about the ultimate bear scenario here for dollar downside and stock downside. Now we're in a situation where what I used to say was if we see the employment figures lower, that's theoretically, that's dovish. That's positive for the stock market. But I really want to hammer home today, that is not the case in this situation. Because we're talking about recessions now, right? So we're talking about if the US jobs data today, what you see in front of you on the screen, if this all comes in weaker, right, it's going to fuel the recession fears. It's not going to be positive for the stock market. Even if it might pop initially, it's going to fall because it's going to stoke more recession fears. This is the thing that's going to confirm the recession, or it's going to, not for today, but I mean the jobs data in general is what's going to confirm whether we are heading into recession or not, or in a recession or not. So the forecast today, we have the forecast at 135,000 jobs added last month, previously at 151. Even that would show a steady decline, but I think that because we saw such a huge move lower in the stock market and in the US dollar, that it's going to take, I think, a figure close to 100,000 Or if we get below 100,000 in this figure, watch out, because we're going to see, I reckon we're going to see a repeat of the moves yesterday. That's my prediction. What else you need to look at is the unemployment rate. 4% was the previous, forecast at 3.9. So we're actually expecting unemployment to tick lower. That's a positive thing for the jobs market. But let's say it doesn't. Let's say it's 4% or 4.1. Again, that coupled in with a weaker jobs number, look for gold upside, look for dollar downside, and look for stock market downside. Right? Hope that makes sense. If it doesn't, let me know. However, there is a situation, potentially, where we could see a pause or a slight pop or slight rally in the dollar and the stock market. And what would that look like? Well, that would look like an unemployment rate which is falling, like a 3.9%. But more importantly, it would look like a non-farm payrolls figure which isn't showing an economy going into recession, really. Maybe a figure around 160,000, 150 to 160,000 or above, right? That would show that actually maybe we've priced in a little bit too much fear and panic. Now, the one thing I would say is obviously the jobs data we see today is the jobs data for the previous month. And what we're seeing for the tariffs and what we're seeing at the moment are the markets pricing in a future recession. So you may get a situation where no matter what the figure is today, it may just be generally a risk-off tone still, because people will say, yeah, okay, the jobs data hasn't fallen yet, but it will. That's what people are starting to price in. So there's a few things to bear in mind there. And then I want to use this time to open up the floor to the chat room. Are there any questions that anyone has about the figures today, or any markets they specifically want me to look at? Because I know everyone's markets are probably moving and people have probably got their favourites. So let me know in the comments section now what market you want me to cover. If I don't get any replies, then I'll just go through the markets that I would go through. Okay, no worries. No, it's fine, no problem. I know it's a Friday and people are probably looking to clock off, but okay. Oh, there we go. Look, see, that's probably because there's a bit of a delay. I'm probably speaking. Bitcoin, Nasdaq, gold, and AU. Okay, I'm on AU now, so let's have a look at that. So with AU, right, what we have to think about for Thai is that we have to think about, okay, so generally, obviously we've seen such a weaker dollar, but the Australian dollar isn't faring that well either, right? Because it's generally seen as a risk-on currency, okay? And in the risk-off times, like now, people flock to your Japanese yens, your Swiss francs. They don't flock into your New Zealand dollars and your Australian dollars. Therefore, when you think about how oversold the dollar is right now, I actually like Aussie dollar, US dollar to the downside from here. I actually think it's threatening, like, as we speak. Okay, genuinely, it is sort of stuck within this range. Okay, so if we're going to be sensible about it, you could say, okay, look, here's the top of the range. Here's the bottom of that range. Tricky market, actually, tricky market to look at on anything other than the daily time frame. But look, quite clearly, right, that's a massive bearish leg. And you can see that from there, we've recovered how much? Right to the 38.2%. I like it to the downside, to be honest. I think that AU will come and test this low at 1.6 at 0.61. Look at that close as well. It's not really, but to be honest, it's not really. That's a horrific trend line. I'm trying to. The difficulty with this market is for ties. I can't really see where the clean entry is just yet. So I'd be a bit more patient. You could maybe utilize a sell stop. So like this. And if we do get another leg lower, 0.6 could be tested. 0.6 could be tested. It's only a 2-to-1 trade though, so I like it to the downside. I just don't think there's the setup's quite there yet. Haven't looked at Bitcoin in a while. Hey, Bitcoin is faring up okay in the middle of this crash that we've seen. I wonder if this is actually going to be a positive thing for Bitcoin. Whether this is going to be something which ends up being a positive, I'm not sure. Again, Bobby, like it's a mess. Can you see any clear? For me, there's no clear structure there. And typically, when I get a situation where there isn't any clear structure, I tend to avoid it. But if I had to lean in a direction, I would lean bearish, just because we've had you can see that we've had a breakdown below. Now we've had a breakout of here, retest down there. But I'm not massively confident in it, to be honest with you. I don't think it's a clean trade at all. Nice reaction from this daily supply zone though. Then we've got a liquidity grab there, so I'm getting conflicting opinions there, Bobby, to be honest. But if I had to lean somewhere, I would probably lean bearish. Look at that. I'd probably lean bearish just. So maybe a move down towards 70,000 from here, but again, nothing that's clear cut for me. Okay. Gold. So I lost 1% on gold yesterday because I tried to buy it from this demand zone. Look at the mess it created. That pretty much means that we need to ignore that now. I mean, gold looks like it could be heading a bit lower here, based on the technicals. Because look, we had our last wave higher. There's our last wave higher, liquidity grab. Then that's the next, that's the bearish move. What we then need to see is something like that. If we see this low break, then we could look for some selling opportunities down towards 3,000. But to be honest with you, this is not an environment that I would be looking to sell gold fundamentally. So for me, it's about, is there any sort of dip that we can buy? Keep it nice and simple. At the moment, again, it's nothing that's clear cut for me. Look at the daily time frame. The structure is forming. I suspect what we might see on gold is we might see, we're going to see some wild days. We might see something like this for a bit. But then, if the situation remains the same, then we'll look for the next leg higher. But if the situation changes, then we can finally get a move down towards this 2,920, which is my daily buy idea. So right now, I'd be looking, if I had to, I'd be looking for buyers, to be honest, because the fundamental picture still remains very strong for gold. However, the setup isn't quite there yet, and you sort of be chasing a little bit, I think. So let's wait for the structure to form a little bit more there, Bobby. Sorry, I know that's the same on two of the markets, but that's the way it is. The Nasdaq, which has now fallen. We're now 18% drop from the top to the bottom. How much more has this got left in it? Well, when I decide that sort of thing, let's get the weekly time frame up. Does it let me add any more moving averages? I wonder. Probably. Oh no, I haven't run out. I want to look at the 200 weekly moving average. Which has acted as like crazy support. So for me, if this does turn bad, then you know the weekly moving average at 16,000 is a really interesting target for some downside. If I just drop down onto the daily time frame, I mean, look, there's a 200-day moving average. It wouldn't surprise me if we see this. Why is that? And I'm not saying this is necessarily what's going to happen, but look what happened in 2022. It's just the same. It's the same sort of technical picture. Is the market traded below its 200-day moving average? It tested it. It made another leg lower and come up and tested it again. Then we got the big move. So what you might see here, Bobby, actually, is this might be. I know that sounds crazy. We could be entering a situation where this might be a good area to try and look for some dips to buy, with a target around 20,000, say 20,000, 20,100 around this 200-day moving average, and try and cash in on that dip. Because we don't know what's going to happen over the next few weeks or months. This could all be reversed, right? We could see a deal made, and then everything's rosy again in the garden. So what you might see is, I think it's always worth a risk trying to cash in on some dips, because if you do manage to catch the dip, you know, and no one really knows where that's going to be, you could then be set up for a massive trade. I just headbutted my mic. You could be set up for a massive trade if you do manage to catch the dip. So I actually would rather, and you can call me crazy if you want, but look for maybe a pin bar or something, and maybe look for a stronger NFP today, just to see him move back up towards this 19,000 area. And try and hold some dip buys. That's what I would probably look to try and do. But it's a tricky market, I know, because it is falling so heavily and there's a lot of fear and panic out there right now. But it's important that you keep a clear head. This isn't going to last forever. Okay. Good stuff. Thank you very much for those requests. And I think that pretty much wraps things up. Just to summarise, I think that NFP only matters today if we see a really weak figure. Because if we don't see a weak figure, everyone's just going to be talking about tariffs anyway, and the recession and the potential recession that's coming anyway. Okay, so they're not really going to be talking too much about NFP if it's sort of roughly in line. But there's one thing: a much stronger NFP is going to stave off those recession fears temporarily, which could cause a short-term rise in the stock market and in the US dollar. But if we get a much weaker NFP today, then that's going to really stoke more recession fears, more panic, more selling, and we could see a day like we saw yesterday. You know, that's the nature of the markets we're in. The volatility index is very high right now. So I won't be trading today, actually. I'm sitting out a little bit and watching this unfold a little bit more, and I'll obviously be back next week. So what I'm going to do is I'm going to schedule the streams on YouTube for next week. So we'll be back to doing like the weekly preview stream on Monday, so you get all the lowdown of what to expect coming up in the week. And then I'll do another stream around a big event in the week as well. So I'll put the streaming schedule in the Discord channel for you all to click note. Like when you click on the link, click notify me, and then you won't miss the stream. But you can watch it on catch up. I know a lot of people do. So if you are watching on catch up and you are watching live, I hope everyone has a fantastic weekend. Don't give too much away to the markets today. It's a Friday. Just be careful. Okay. All right. Good luck. Trade well. Trade safe. Take care. And I'll see you all very shortly. I'll see you on Monday. Thank you.